Hey, it's Michael Saul, also known as Tiny with the Market video for the week of December 2nd, 2013, also known as the home stretch for the year. And I tell you, I don't know about you, but 2013 flew by for me. So maybe 2014 will take its time a little bit. Hope everybody had a wonderful Thanksgiving and a great Hanukkah if you're celebrating. The Bulls sure did, as the market closed up for the sixth straight week in a row. The S&P 500, that's the broad market. Now we are overboard here, and somebody wrote me and said, I'm a top picker, which I just love when I get the hate emails because it just means that they just want to hear what they hear out of the videos. We were overbought last week, and we are still overbought. But like I've been saying, I am not trying to pick a top in this market. I believe that the next pullback will be viable. Okay, for a top to come in, it usually has to form some sort of reversal pattern or something in the spirit of a head and shoulders, meaning a left shoulder, and then a higher high, and then some sort of right like shoulder. It doesn't have to be a picture perfect pattern like that, but it has to do with testing and falling shy of the previous highs or even testing the previous highs, whatever it is, in the case of a double top, and then moving down. And right now, we're just in complete grind mode here. Now, I don't think, as some of the super gurus are saying, that we're just going to melt up into the end of the year. I think we're going to pull back first, and I think that pullback is going to be one last chance for those that are lagging the market to pick it up. I'm talking about institutions and funds. I think that the next pullback is tradable if you're a swing trader and you're a day to day kind of trader, but otherwise, I think you may want to step aside, wait for a pullback, and then look to get on board. Now, that next pullback may or may not go to, if it does resume the pullback, because there's a chance it won't, it may or may not hit a new high into the end of the year. So I don't know if when the pullback does start, if that's going to be the high or not. It's not the point. I'm thinking that a nice pullback will set us up for one more attempt to go higher into the year end. I do not think these gains are going to be given up that easily by the the swing traders and by the not the swing traders. Sorry, swing traders are in and out the whole way up by the institutions and all the funds and those that are graded on performance. I think they're going to defend, defend, defend. So the key is to watch for support points on the way down. All right, here's the S&P. You got the short-term moving averages, then you got horizontal support right here, and then below that you have more horizontal support and also the 50-day moving average. Now from here, 6 points is this is more than 6 points. This is 6 3/4 points. That's a pretty decent size move from here. But when you think about it percentage-wise, it's only what is that 4%? Let's see. So 4 on 180. Sorry to do the gorilla math in person here. That would be like 367.20. So that would actually be less. It would actually be less than 4%. That's not really a big move, okay, from here. So it looks like it's big as far as airspace is concerned, but it's really not a big percentage move here. So that could happen, and we could still be riding high as far as in line with the pullbacks that we've seen, and maybe we don't get a bounce into the end of the year. I mean, if you look at last year, right, we sold off into the end of the year. We did get a little bit of a bounce, but we never took out those highs, the highs from 12 until 2013. So I mean, to me, it just the way we've been trading, it does not look like we'll get a crash bang boom type of a move. Pending news, and I don't even think the news, unless it's something really, really serious, which we don't like to talk about, um, comes in. I don't think it's going to be any fiscal policy or any warnings of inflation or any of that crap. All right, so let's go around the horn quick, take a look, and I also have a stock for you to watch as well. Here are the cues. I mean, they're just stretched here. The Russell, we're in that zone now, the time zone where the small caps start to outperform the large caps. This is known as the January effect. They're stretched too. The Russell stretched as well. Diamonds, okay, look like the S&P. Mid caps are the only ones that are lagging so far, but that's okay because they hit the highs earlier in November when the Russell was lagging, which of course the Russell finally caught up. Here's the semiconductors at a new high, but didn't really hold. Financials, yeah, I mean, clipped to a new high, but started to sell off at least on the Black Friday. And here's banks, which had been outperforming. They're in a small consolidation here up at the highs. So, for more thorough analysis on the sectors and the market, you could pick up the newsletter, which is free. It's free for you to view now. We're actually getting ready to roll it out in January. So, this will be the last month where you'll be able to see it free. And we're constantly making changes to it. We have a whole new design format that we're working on. We're going to be adding a lot more stocks. We're going to be adding an ETF section. So, we're going to enhance the market timing stuff. So it's really going to be worth your time. So you can get that at stockmarkettrendsex.com/newsletter, and you'll be able to access it and also look at the back issues as well. We haven't really been doing much as far as calls and stuff like that, but we're going to be starting to ramp that up starting now and be ready to roll this out full blast in January. All right, so for now, I think we're overdone to the upside here. I think we need a rest. I'm not counting at the bulls, I'm not calling a high here. And of course, I always want to see confirmation that we are actually doing what I think we're going to do, not just guessing that this is going to happen and start taking shots. I'll leave that up to the super gurus, and then they can tell you how they called this rally all year. When meanwhile they're picking tops, selling lists about what stocks to short that just got completely utterly buried. Stuff like LinkedIn they called to $75. Best Buy they called to be out of business when it was down here, right? Best Buy going out of business when it was in the teens. I mean, just ridiculous stuff. All right, so that's it. Sign up for the nightly email, or the morning email, and also, like I said, I posted the link to get the newsletter, so you could check that out as well. I will talk to everybody in the next video or daily through the newsletter or email. Have a great trading week.